clearly investors like this deal. What are the terms and what are potentially still some of the challenges?
It's good news for Masayoshi Son, the founder of SoftBank. They paid about $32 billion for Arm, if I'm not mistaken, around 2016 or 17. And at that time, it was highly controversial because it was a huge premium for a company that's already gained quite a bit in share price. And it wasn't very clear if SoftBank can do much more with it. And they've struggled since that, pumping a lot of money into their IoT segment, increasing hiring significantly. And it wasn't really clear that this business was going anywhere fast enough to justify that kind of valuation. So it's certainly a happy end for Son to be able to get out of it with a premium. I guess it would create a bit of a cognitive dissonance considering the extent to which he painted Arm as a centerpiece of his sort of AI investment strategy. But as you said, the markets certainly love it when Son sells stuff and not as much as when he does invest in things.
And we're also hearing talk about Masayoshi Son taking SoftBank private. What's this about?
These conversations have been rumbling behind the scenes for, since at least 2015. And the reason is there's been a persistent discount on SoftBank Group's market cap. Some of it is justified, a conglomerate discount, but, at times it exceeded 50%, and, oftentimes SoftBank is worth less than its stake in Alibaba alone. And we know that Son has consistently struggled with this. And even after announcing these tremendous 2.5 trillion yen buybacks, the company is still cheap relative to what it owns. So the argument that, having to take the company private, free Son to cut deals without the public scrutiny has always resonated with Son and with top management.
So at this point, what is stopping him?
It's a good question. Well, for once, the company is heavily loaded with debt, and they're constantly relying on public market to refinance it, roll over, on and on. So if Son were to take the company private, chances are the creditors would not be as forgiving, and he would have to use some of that cash to at first pay off the debt before he can get back to investing. And, this could mean months and months, if not over a year, of not cutting deals and, making deals, investing in tech companies. It's pretty much what Son lives for these days. So they've spun off the telecom operation and sold Sprint. Investing is the lifeblood of the company, and having to be out of the action for a while could be a tough one to swallow.